Tech is the laggard today. The Nasdaq 100 down 1.5%, and Nvidia shaving 90 points off that, with shares slumping about 5% today. But my next guest says it's an entry point. He expects tech to lead the way yet again this year, saying the AI monetization will begin in earnest, and the rally we've seen so far is child's play. He does see the S&P topping 7,000 by mid. Keith, this was sounding believable until we got to 7,000 by mid-year. Come on.
Well, that's what they said when I first launched into AI is going to be the greatest investing theme in recorded human history a couple of years ago. It's a good thing I got a thick skin. Yeah, I think we're going to get there. The amount of capital worldwide that wants to go to work is still going to look to the United States. We control the dominant share of AI. We control the world's best companies and profit margins. So, long story short, I think it's going to come running. The economy for those companies is still stronger than people expect.
What do you say to people? And listen, you've been right, and I hope you're right and continue to be right. However,
so do I.
A lot of people will point to the charts and say, when valuation is in the top 5% of its historical average annual returns following that are only 2% or whatever. I mean, what do you say about that? That has been true over time.
Well, it has been true, right? But here's the thing. PE ratios, despite what everybody believes and despite what's taught at many uni systems around the world, is that PEs are not a causal relationship. They are something that happens anecdotally. So my view, based on accounting regs, something we've talked about, is that PE ratios are presenting a misleading picture for digital investing. It's one thing if you're producing cars and talking about Ford or GM, but if you're talking about a digital company where return to scale matters, PE ratios are high, and that's exactly what you want to see because the cost of adding an incremental customer is almost nothing, despite the fact that it's expensed in the front end.
You're sticking with Palantir. That's another one, 10% off the recent highs. So you're not fazed by this little kind of soft patch.
No, not in the least, because I've been doing this 45 years. I've seen this stuff come and go. This is a technical sell-off. This is big traders moving money around, highly leveraged, technical motion whatsoever. And if you understand the market mechanics, but you look at the long-term fundamental picture, the long-term expansion, the way AI is expanding, the trillions of dollars that are being brought to bear on this, I submit that the game is just getting started.
All right. You remind me of Dan Ives, who says it's something like it's just past midnight. Get the popcorn out. Keith, if AI can fix your shot, it's like you're squeezed. You're squeezed.
Oh, I know. I need to gain some weight here. Something's about the cameras, and I haven't figured that out yet.
When you do,
I may know tech, but I don't know cameras.
Yeah.
Sorry about that.
And you're a yes on Tesla too, right?
That is absolutely correct. It's another one of those stories where, again, the broad misconception is a widowmaker trade for everybody who doesn't understand it. Elon Musk has been very clear about what he wants to accomplish. Everybody says, no way, and then he goes out and does it. So to me, yeah, he may drive me nuts that the markets may be challenging. But again, I think 3 to 5x from here, we've already doubled off the summer lows that we talked about.
My goodness. Sometimes I do think maybe I need to think bigger. Keith, thanks for your time today. We appreciate it.
Thank you. Cheers.
Keith Fitz-Gerald with the Fitz-Gerald Group.